welcome back to my channel. So today I would like to talk about the effect of presidential election to the stock market. So today I saw an article that has done analysis of the previous 23 elections from 1928 to 2016, and they found that in the election year, like 19 times has positive returns while only 4 times that has negative returns. And also according to an article that's read by a peptide professor. So from the past data, it has shown that it seems that for each president's term, on the third year, it has the most return, and followed by the fourth year, and then the second year, and then the first year. So that it shows that investors are most likely to get the most of the returns if they invest on the October in the second year and they sell all their positions in the December of the fourth years. However, this presidential elections and the stock market cycle does not always true. For example, in Obama's presidency, the first 2 years the stock market is more profitable than the third year, and for Trump's presidency, the first year is more profitable than the second year, and the third year has a surge and then followed by the kind of market crash in the fourth year. Especially there's another big market drop in September. So currently during my observation and also the statistics shows, it's already hard to predict that this year whether Trump or Biden will win the presidency, but I think there are several things the investors can do to prepare no matter who wins the election. The first one is risk control. So I think since there's market uncertainty, a lot of investors, they want to bet on the assets that have a more stable return. Just in case if Biden do win the presidency and he changed the tax policy, there may be a big sell before his new policy launch, and that would probably cause market volatile. So I think for some high risk like penny stock or option trading, maybe we want to avoid it at this time. The second thing is because the two parties have different policy on tax issues. And if they would adopt more tax to the big companies, especially the big tech companies like FAN, that's also likely that their earnings per share will decrease, and that would also affect their stock price. So I think the second strategy is to currently invest the stock which doesn't be so expensive yet. So if we look at the PE ratio, maybe avoid those stock, the PE ratio already over 100, and invest in the stock that currently their PE ratio is below 25. And the third strategy is to diversify our portfolio, maybe invest a variety of stocks, like just in case some new policy maybe have effect in some specific industries, like if they have different policy on the energy business. It seems that Biden's policy will benefit more on the EV industry, while Trump's policy may be more beneficial to the traditional fossil fuel industry. So if we invested in a variety of industry or different companies, we would not suffer from lose just because of the possibility of some new economic policies. So after I saw the presidency debate last night, I find it's very interesting, and I think no matter who wins the presidency election, if we prepare well before the result come out, we would not stress out if things would not go to the direction we expected. That's my thoughts on the stock market today and the recent news. Hope you guys find it interesting, and I will see you guys in my next one. Bye!